Good afternoon and welcome to the AICPA Town Hall. We greatly appreciate being with you on at least this bi-weekly basis. We've got a full program today, so we're going to get right into it. I'm Eric Auskerson, one of your hosts. So first off, let's just cover a couple of housekeeping items. You all know that you can earn CPE if you're watching the live event. You've got this toolbar at the bottom. You can click on the blue CPE certificate button to get your certificate at the end. But don't worry if you don't get the certificate at the end. We are sending you a follow-up email. And we also have this new CPE tracker that you can leverage in addition. On that toolbar, that orange button allows you to download the presentation from today. And we also have a number of other materials, such as the frequently asked question resource document. And we also want you to ask questions. We've got a team here responding to them, and we will have an open forum at the end. So as I said, this is a busy week. It's been a busy 24 hours. So we're going to kick things off and talk about the latest from our policymakers and what's happening down in Washington, D.C. We'll talk about some of the hot topics, such as the 3509 and 3510 form and a lot of the latest developments with the IRS. We're going to do our usual update on kind of latest guidance, in particular related to the PPP program. We also have a special update today around single audits, and we think this is something that you all should be thinking about related to all of these different pandemic business relief programs. And then we've got a practitioners discussion. And I'm going to highlight who I have here. We've got the vice chair of the AICPA, Bill Paroli, joining us. So he's going to talk about some of the on-the-ground issues that his firm, DeSanto Priest, is managing through with the PPP program, as well as other tax matters, and also give just broader perspective from his leadership role at the AICPA. So along with me, I'm the CEO and president of CPA.com, AICPA's business and technology subsidiary. We've got Mary Foster, who leads the government accounting and assurance area. She'll be talking about single audit today. We've got Carrie Hisbach, who you all know. She's part of the team leading firm services at the AICPA. And we've got Mark Peterson, who leads the advocacy area for the AICPA. So welcome to all of you. What we do every week is we bring you the latest information based on our discussions with government officials, the firms, information providers, and lenders. And just a couple of comments here. When we're meeting with them on a weekly basis, what I can tell you is everybody's got positive intent. We've had a couple of calls with Treasury and SBA this week, and there's new announcements coming out. They're doing their best to try to put the programs in place to support these business relief activities. At times, there's unintended consequences with some of these steps that they're taking. And what we're doing here at the AICPA is we're providing feedback. Sometimes that feedback is when we issue a letter to our elected officials and leaders in the administration. And we'll be talking about that to try to correct and address some of these unintended consequences that have occurred. We're also continuing to work with our coalition, the lenders and the payroll providers, to do the best we can in supporting both the borrowers, your clients, as well as giving feedback to the governmental officials. So a lot going on in the marketplace right now, and here's a couple of the hot media topics. We've got a JVA article talking about single audit and the pandemic, and then we've got two articles here talking about the 3509 and 3510 forms. Those are about the additional questionnaires that are being sent out by lenders to PPP applicants that had loans greater than $2 million. So we're gonna get into all of this, but we're gonna kick it off talking about how things are beginning to settle out. Mark, last time we had a town hall, it was a few days after the presidential elections. So now you've had 2 weeks to digest all of this. So why don't you share some of the latest insights with our audience.
Sure, Eric, thank you. It has been 2 weeks, but the smoke is still clearing. It was pretty thick there in the beginning. So just some real quick observations. Everybody knows the outcome of the election, but what it means for practitioners. The Democrat majority in the House is going to stay, although at a much more narrower majority, which means there's less likely of major legislative packages moving through that. It doesn't mean that the gavel and oversight isn't still with the Democrats who prevailed. It's just that majority got smaller, which is going to have an impact. It's going to be something that we're going to be watching very closely, again, as the committees start to get populated and we see agendas. Everybody's talking about it. The Senate, 2 races in Georgia for a runoff, January 5th, will be concluded. They basically decide who will have the majority. It's either going to be 50-50 with presuming a Biden administration with Kamala Harris breaking ties as a VP, or Mitch McConnell will maintain the leader. Again, either way, majority makes a big difference. So that's why there's going to be a lot of focus on Georgia and the outcome of these races. But with the majority that close, if not tied with the tiebreaker of the VP, again, it's going to be hard for large packages unless they're bipartisan to move through. And then again, presuming the trajectory is for a Biden administration, we're going to start to see names that are going to pop up for Treasury, starting to populate the administration. It will give us a sense of the administration's agendas, what they're going to be moving forward within the purview of their executive privilege and things like that. So that's kind of what we're seeing right now, Eric. And again, as the weeks roll out, we'll know more.
Well, Mark, so let's just talk about some of the hot topics that this group's focused on. Timing for PPP2. I know a couple weeks ago we said, based on what occurred, there's a greater chance that something now would happen prior to the next administration. So why don't you comment on that, and we're going to talk in depth about the tax deductibility of PPP expenses in our open forum with Bill Paroli. But why don't you comment a little bit on where that still stands on the high likelihood, basically, of that getting done at some time, just a question of when.
Sure. The Senate just went home for Thanksgiving break. They've been here working all week, both sides. And basically, I think the biggest relevant fact is the White House, Mnuchin has backed out of the negotiation. So the negotiation over the next package is between Senator McConnell and Speaker Pelosi. They have both said they want a deal. That's good news. Neither of them have indicated they're going to come off their number of $500 billion or $2.6 trillion. That's not good news. So where we are right now is we're going to be watching very closely after they come back after Thanksgiving. They still have to get a budget done, and they got to authorize a defense bill. I think a big indicator whether a package does get done will be what's their experience when they go home. What's Main Street look like? What's the spike in coronavirus? Those types of things. So, again, it's week by week. We still are going to continue to say not if, but when. That's the next window of opportunity. And if not that, then we're looking at getting into January for that. Deductibility, we still believe if there is a package that it will be included. We know we've had bipartisan support. There's legislation that has been introduced on PPP deductibility that's gotten a lot of support. That will not pass freestanding. It is highly unlikely. Can't say never. Highly unlikely. It's going to need to be carried along within a stimulus package, we believe. And so our real focus is going to be on what's the likelihood and the odds of that happening. On the tax side, I think it really revolves around what I just laid out for you in the election. Because of the narrowness of the election, because of the potential that we have split government, Republican Senate, Democrat House, we're not going to see an extreme partisan deal on either side. It's just not going to happen. So it means it's either going to be bipartisan, where they negotiate something in a bipartisan way, or it's going to be fairly narrow fixes, I think, on the tax front. But again, we'll have to see when they get here and get sworn in and start to go to work.
So we'll stay tuned on that. We know a lot of the CPAs that are watching today, we're all on social media. It seems to be more and more of them calling their local congressmen, their senators, saying, we want action on that deductibility. Obviously, that's a good thing for them to be doing, Mark. Sure. Even though that bill might not pass, it'll get the attention of of the elected officials. So we got a couple of other things we want to cover here in this policymaker update. One is just our communication related to the loan necessity questionnaire forms. Those are the 3509 and 3510 forms. We talked about them 2 weeks ago, and they have been provided to lenders to provide to borrowers for a borrower that has a greater than $2 million loan. And a couple of things here. One is it is still the intent that most of these loans are going to be forgiven. And what these questionnaires, the goal of these questionnaires were to comply with the liquidity elements that were outlined in the FAQs back in April and May. And we have communicated that this clearly is creating anxiety and additional burden. And we, in this letter, with over 80 other business organizations, asked for these to be, put on a temporary hold. But what we do know is more information is going to be coming out related to these forms. There are discussions going on right now about how the communication around these forms could be improved. Without a doubt, that that needs to be done. And what is the the intent of these questions. So, Mark, I don't know if there's anything you want to add to those broad comments.
There's no doubt that this has had a chilling effect on those that are considering forgiveness, and we've obviously been very vocal. Right after we saw them about the challenges there, we're making sure that the policymakers on the Hill know that. There's sides of the story, we're seeing it from this side where, there's after the fact questions and all of the issues that you just laid out, Eric. The other side, which is kind of the counter argument, is, it's over $2 million of taxpayer money. Yeah. If you got to answer some questions in order for it to be forgiven, it's a small price to pay for being able to be your loan forgiven for $2 million. So there's definitely a counter argument that's pushing back, although we're definitely making our case. The intent of the program was to get money out to keep people on payroll.
Right. And I'll just say one thing. We're going to, maybe in the next town hall, we'll talk about some examples, but they do understand that there were businesses that had no idea what their outlook was like in early April, and they applied for these loans, and then guess what? Their business turned out okay. And they are not stating that those loans will need to be repaid. Even though they're asking for Q2 revenue in 2020 over 2019, they're asking for a data set. You do have an open field area where you can provide some of your documentation or your thoughts related to what your situation was back in April. But just because they're asking these questions does not mean that they are going to decline the approval of forgiveness. So this is like a first step, and we're going to continue that discussion. So, Mark, here we got a special slide here just highlighting a little bit of a disagreement between the IRS commissioner and some accountants over what should be done related to extensions or relief, I should say. So right. I'll let you handle this slide.
No, listen, just to start with, we work very closely with the IRS. We're very invested in a healthy IRS. We've been very sympathetic to what they've been going through during COVID. But, practitioners and clients and taxpayers have been going through a lot through COVID too. And we do argue that there has to be some relief. Notices are coming out, checks are being mailed in, not cashed, and then clients are getting notices. There's all kinds of examples that are pouring in from firms because they can't get through to the IRS to try and resolve this. We're not seeking blanket relief. We're trying to come up with, a dedicated phone line, no need for power of attorney, some level of abatement. We're going to make those arguments. We're going to continue to make those arguments. We've been talking to Capitol Hill as well to make sure that they know their constituents are dealing with absolutely an untenable situation as it goes to the need for this relief. So we believe strongly that the IRS should provide the relief, and we will continue to make that case.
All right, thanks, Mark. We're going to talk more about that with Bill Feroli. So thanks, Mark, for that update. And now, Carrie, let's just get into a brief section of kind of some of your latest recommendations.
Yes, thank you, Eric. As always, I'm grateful to join you all and shed any possible light on PPP guidance, specifically any new guidance. Thankfully, today, I should not be the bearer of any significant news. Since we haven't received any new SBA guidance since the last town hall, I simply have a few refresher items to address. First, let's take a look at questions that our team has frequently been asked over the past few weeks. The focus of previous questions had typically been on the use of PPP funds, but our recent top questions actually pertain to FTEs. The first question that has come through our email somewhat frequently is asking for clarification on the data collected on the face of the application, which you can see circled in the first image on this slide. Some have been asking if this value should be the FTE calculation numbers, but to be consistent with the initial PPP application when the funds were requested, it's our understanding that this number represents a head count. The FTE calculation, which impacts the FTE reduction quotient, isn't determined until the following pages of the application. The second question we're seeing as borrowers are getting into the details of the loan forgiveness application is how exactly to calculate FTEs. Available guidance indicates to use average hours per week, and the questions we've been receiving relate to exactly how to determine average hours per week. There is no specific guidance available which dictates how to calculate this number. You'll notice on the AICPA FTE calculator, the resource requires the borrower to input the average hours per week. This is circled in the second image of the slide. Without specific guidance, the focus of the borrower should be to pick a methodology and consistently apply it during the covered period and any comparative period. Once the borrower has determined how they are choosing to calculate average hours per week and inputs the data, the FTE calculator will walk through the FTE calculations as outlined in the Form 3508 and Form 3508 instructions. Also, before diving into any additional work, please be sure to check with your payroll provider or ask your client to check with their payroll provider to see if the average hours per week can simply be obtained from payroll reports. On the next slide, we have another reminder about a way to make the PPP process a bit more manageable. We've gone into detail about the business funding portal on previous town halls, so this is simply a brief reminder to consider logging on to cpaloanportal.com to assist with streamlining the PPP loan forgiveness application. This platform will produce a zip file with the Form 3508, 3508S, or 3508EZ, and all the supporting documentation, which the client can then directly submit to the lender. The last item I have to discuss on this next slide is regarding the recognition of the role of CPAs in the PPP forgiveness process. We've been seeing that lenders and the SBA are encouraging borrowers to talk to their CPAs as they work through the PPP forgiveness process. At the AICPA, we are working through a draft preparer statement for CPAs to utilize as they assist with PPP forgiveness to make clear that the information presented in the forgiveness application is from the borrower. The statement will be made available on our site, and we will be sure to share that with all of you once it is live, and it will ultimately be integrated in the CPA loan portal as well. So that is all the exciting news that I have to share today, and I'm sure you are all very excited to hear from Mary and her information on single audits.
So welcome,
Great.
thanks, Carrie, and welcome, Mary. And I'll advance you to your first slide.
Great. Well, thank you so much. I'm really happy to be here today to talk about single audits. It's one of my favorite topics. And I guess I want to spend a couple minutes level setting on exactly what a single audit is in case some folks in the audience are not familiar with a single audit. So it becomes required for primarily states, local governments, and not-for-profit organizations that expend $750,000 in federal awards. So that's primarily the definition, although there can be situations where for-profit entities become entangled in single audits, and I'll get into that in a minute. So the result of a single audit is an audit of compliance. The auditor performs procedures to determine whether the entity complied with provisions of federal awards, which we call major programs that we're testing. And the auditor gives an opinion on compliance and also reports on any internal control deficiencies that they've come across during the engagement, as well as findings that they come across during the engagement. And these things are all reported back into the federal government. If you could forward to the next slide, Eric. Great. So let's talk a little bit about the COVID-19 funding implications on single audits, and there have been some significant implications. I know that this town hall format really focuses in on the PPP program, and you can see on this slide, that's the first block, and that program was over $600 billion. And one of the first things that my group worked on in the beginning of this whole process was to determine whether the PPP loans would be subject to single audit. And I'm sure to the relief of many that are participating today, the answer to that question that SBA came back with was no, that the PPP loans would not be part of the single audit process. So the other three blocks on this slide really talk about the other three big programs that came about, although I will caution you that these are just three of them. There's closer to 20 new programs that came about. So the second biggest one is the Provider Relief Fund. $175 billion was sent down from HHS to healthcare entities primarily. They could either be for-profits, not-for-profits, or they could be governmental entities. And that program is subject to single audit. And remember a minute ago, I mentioned that there's typically not for-profit entity involvement in single audits, but the HHS rules are such that when healthcare providers that are for-profit receive these funds, they actually get into an HHS audit requirement that could require them to have a single audit. That program is different than really many other programs that we've dealt with before in the single audit arena, because not only does the program allow for expenses to be reimbursed as defined by HHS, but also a concept of lost revenue that these entities may have incurred during the pandemic. The third largest program is the Coronavirus Relief Fund. That's $150 billion that was sent down through Treasury to governmental entities and tribal entities. Now, I will just mention that the provisions of this program also require the recipients to send a percentage of their funding down to lower levels. So many local governments got this money from the states, for example, as well as not-for-profit organizations. And again, this program is subject to single audit. And then the third block here talks about the Education Stabilization Fund. And the agency there, of course, is education, passing the funding down to states and schools and institutions of higher education. So primarily your colleges, universities, and your K through 12 institutions. And again, this program is subject to single audit. So the Quality Center has put together a link at the bottom there that summarizes all of the new COVID programs and whether or not they are subject to single audit. OMB has also included a listing on its website of all the different COVID federal assistance programs. And one word of caution here, it's not just new funding that came about as a result of the CARES Act and other legislation, but it's also existing federal programs. They received a lot of new funding under CARES. And so, you know, that's something that auditors are going to have to pay attention to, because in some cases that may have tweak the compliance requirements that the entity has to comply with. One example of an existing program that got new funding under the CARES Act is the economic injury disaster loans. And those that were received by not-for-profit organizations would become subject to single audit. And I know that's a program that's been discussed on the town hall before. So if you could switch to the next slide, Eric, we have a lot of challenges that have resulted from these engagements with all of this new funding. Basically, the way that things normally work is that when a new federal program is established, there are regulatory requirements that are put through due process to establish the parameters for the programs. However, in this case, because of the crisis, the funding basically went from legislation down to the agencies to distribute, and they were left having to establish parameters for these programs through guidance documents on their website. So that's definitely been a challenge for both recipients and auditors to learn what the requirements for these programs are for spending purposes, and then ultimately for auditors to have to audit them once the funds are spent and the audit begins. Eric, could you switch to the next slide for me? Okay. So there's been, just like with PPP, a lot of challenges with the agencies changing guidance, adding guidance, removing questions, and that ultimately is causing a lot of consternation on the part of the folks that are trying to figure out how to comply. The other thing that's happened is that the auditor guidance for testing these new programs has not been issued yet by OMB. We are waiting for an addendum to the OMB compliance supplement, which is the document that auditors use to determine how they're going to audit these programs. And to date, OMB is still working on the addendum that will explain ultimately, how we are to audit these big new programs. And so what that has done is put the programs on hold in terms of the auditor being able to audit them in most cases. So many single audits are hanging out, waiting for the guidance that the audits can be completed. That's a big challenge for the June 30 audits in particular, because they're due on March 31st of 2020. And in many cases, the audits have significant portions that need to be completed. So we have been working closely with OMB as the addendum with the program requirements for these programs have been developed. And we are hoping that the addendum comes out by the end of November. At least that's the greatest date that we have at this point in time from OMB. And then on my last slide here, I wanted to talk about the work that we've been doing through the Quality Center in terms of advocacy and communication.
And one thing, that slide's at the end in the Resource Center section, so we'll hit that then, Mary. But just a question, a lot of questions coming in. Our team's doing a great job responding to them. But just broadly, there's a couple questions on, maybe some confusion. Is there the relationship to PPP and single audits, and what triggers the single audit? So maybe just a couple of quick closing comments
Sure.
on that, and then we'll get back to that additional resource slide towards the end of today's presentation.
Sure. Yeah, and basically the PPP program is not subject to single audit. There was some question about whether not-for-profits that got those loans would have to include them as part of their federal awards to the audit, but we did get confirmation back from SBA that was not an expectation. So PPP is off the table as it relates to single audit.
All right, thank you. And it's the $750,000 level.
$750,000 is, yep, and that's for the other programs that I've mentioned. The new programs, a lot of new entities are going to be getting single audits because maybe they got a little bit of federal funding in the past, but they now have over the threshold, right? So they're going to have a single audit. Their auditors are going to maybe be doing one of these for the first time. So I would highly recommend that folks use the Governmental Audit Quality website address on the slides to go over and look at all the resources we've been putting out, both for auditees and auditors that are getting into this for the first time.
Well said. And that's when we were talking about this before today's session, and just how there'll be many small and mid-sized firms that were supporting some schools, some governmental entity that they didn't experience single audit before, which will be experiencing it now. There's questions on these links. All of these are hyperlinks in the presentation. They take you right to these different resources that we've been discussing today. So thanks, Mary. We'll be coming back to you in open forum. That was a great overview. We're going to start now our discussion with Bill Paroli. Before we do that, just quick reflection on what's going on. I mean, it's amazing. It's November 19th. We've been having these town halls now for the past 7 months, but all three of these things are happening. We all know this, that there's businesses that are being having to close again, restrictions being put in place, matters that the firms are working with their clients on. We're in the forgiveness phase right now of PPP, but there is going to be more business relief. So that's something that we're continuing to work on, is to be ready for this next phase. When we've spoken to some of the government officials, they're even working on getting these forms ready based on some of the current legislation that is being discussed. So it's going to happen fast when it does happen. And then finally, we're talking to more and more firms about the business model review. So let's welcome. Maybe we're going to try to go to 4 squares here and bring Bill in, and Carrie and Mark Peterson, and we also have Ed Carl available to discuss a little bit about the PPP expense deductibility issue. So what we're going to do is we're going to hit this hot topic. We've got a lot of questions coming in on the PPP expense deductibility based on what came out from the IRS last night. So Carrie, if you want to maybe just quickly even mention, review this slide, and then this will set up us to bring Bill in and really talk about how his firm is seeing this issue.
Sure, happy to. So we are going to jump into PPP expense deductibility. Based on the questions that I'm seeing, this is why you are all here today. So no pressure on Bill, but they are here for this conversation. So the current status before yesterday, we obviously got some additional news, is based on IRS Notice 2020-32. And as a reminder, what this says is that any expenses that were paid with the proceeds of PPP money cannot be deductible. So we were waiting for additional guidance. We all got some news last night around 7 p.m., I believe, Eric, is the time you were quoting. So we have a few additional components to address there. Ed Carl is definitely the expert on that, so I don't want to steal any thunder. AICPA is continuing to advocate for legislative action to make PPP expenses deductible. And as Mark mentioned earlier, this will likely come in the form of the package through Congress. So off to the right, we have a quick summary that simply says the CPA should have a conversation with the client to explain the risk and rewards and let the client make the decision. And with that, I think, Bill, you have some great insight.
Yeah, so with that, Bill, so this here, what happened last night was what we said 2 weeks ago was going to happen, but now, right. So now it's more certain. So why don't you reflect on what was announced last night, and then this slide here, highlights a discussion we had with you prior to today's webinar on how many are seeing the different options. So welcome, Bill.
Thank you. Thank you for having me, Eric. I'm thrilled to be here. I wish I had some really concrete advice for everyone. I'm a frontline practitioner just like you are, and we're struggling with all these same issues. I think it's probably a little helpful to go back and figure out how we got to this point, right? So initially PPP put into place, the intent of the bill and stated in the act that the forgiveness would not be taxable, and everybody thought that was great, and we agreed with that. And then people like me started calling up Ed Carl and expressing a little concern about, wait, are the expenses going to be deductible? And Ed, that we started asking for guidance there. And as Ed said, you may not like the answer. And as it turned out, we didn't like the answer, right? The answer came back, your expenses associated with forgiven debt will not be deductible. So then we all pivoted and said, okay, well, if the debt isn't forgiven in the current year, then maybe we'll get the tax benefit rule that says I'll get to deduct my expenses, and if my loan gets forgiven in the following year, I'll pick up the revenue in that year. And that kind of got squashed again with this announcement, saying that if you have a reasonable expectation, whatever that is, however that's defined in the code, I have no that your loan will be forgiven. It's as if it is forgiven by the end of the year. So now we have to go back out to our clients and talk to them again about what the new reality is. And, so with most of my clients, they're a mixed bag. A lot of them have already applied for their forgiveness. They've done it without us. Some are looking to us for help. The tools that have become available that, Eric and his team and Carl and everybody else have put together have been really helpful. The coalition and the payroll companies are pushing out some great reports, making it easy for folks. So people, they wanted to get it off their plate. They wanted to file for forgiveness so they could be done with it. They felt they qualified and they wanted to get it done. And we were generally saying, don't be in a big rush. We should really wait and see if we get more guidance from the legislature on the deductibility of the expenses. So here we are again, coming up on the end of the year. And what are your options? I mean, for me, the best option for me is the wait and see option. Now, I know that there are practitioners out there on this call right now that have a situation where it will be more beneficial for them to file now. Maybe they have a C Corp with a large loss that has money trapped, and they want to get that return in right away so they can begin the process of NOL or maybe get some money back. And maybe they don't care if they pick up the loan as income. All right, so maybe they'll go ahead and do that. But generally speaking, absent a situation like that, I don't personally believe we should wait as long as we can to see if we get the guidance that we expect. And obviously, in my role at AICPA, we take the very firm position that it was not the intent of the bill. And as Eric said, it's created these unintended consequences where the government went out and gave us money for payroll protection. And they asked everybody to keep their people employed so that they wouldn't hit the unemployment line. And that's what we did. We took that money and we spent it in the spirit of the law. And now there's a penalty for doing that if they disallow the expense. So the employer would have been better off letting his employees go on unemployment if he was paying them for essentially not working. That's not the spirit of the law. And then the other unintended consequence is it creates double taxation, right? So we're going to disallow an expense at the corporate level, and 75% of that expense should have been paid on payroll. Those W-2s will go out, and those people will pay tax on that income. Clearly not the intent of the bill to create double taxation. So for all of those reasons, I think we're going to continue to push, get back to the spirit of the bill. The spirit of the bill is that this money should come in free of tax in any shape or form to the recipients. So we're hopeful, as Mark Peterson said, we're hopeful that it gets into some legislation. Unfortunately, we're not sure. So what we're doing is we're doing tax projections on both ways. If your loan is taxable, if your expenses are deductible, and then we're letting the client know what the tax effect is both ways. Really, I don't, if most of these loans were given to pass-through entities, and Ed, I don't know if we have any statistics on that, but my guess is a lot of the smaller loans went to pass-through entities. I'm quite sure that the practitioners weren't baking in forgiveness tax debt into a 915 estimate for an individual. I know I didn't. So January 15th is another inflection point that we have to talk to clients about is, hey, if we don't know by January 15th, should we pay in an estimate to maybe mitigate tax penalties? And then, of course, April 15th is the day where it all comes together, right? And during that time, I guess if we get better clarity, then we'll know what to do. Second option, file the return, pay the taxes. So you recognize the forgiveness, and you're going to pay those taxes. And I'm not really sure why anybody would do that in this uncertain time, but you could certainly do that. You could also file the return and deduct the expenses. Now, that's contrary to what the IRS has come out and said. So Ed and I were chatting, do you need to disclose? So certainly, if you file that, you deduct those expenses and you disclose, then that return is obviously ripe for audit down the road and accruing interest and penalties. If you don't disclose, what does the return look like? It looks like a normal tax return. There's a whole bunch of expenses broken up between wages and rent and utilities, and there's debt on the balance sheet. So I'm not so sure how that gets triggered unless the IRS matches PPP loans to the tax returns that get filed, and they know that that company had a PPP loan. You have to assess the risk yourself as a preparer, and you have to assess the risk for your client and talk it through. So we're just starting those conversations now. I don't think we'll have clarity, but by the end, the clients are going to have to they're not going to have to make a decision right away if we extend. So that's
Bill,
answers your question, Derek.
Yeah, I can tell from the questions coming in that people have greatly appreciated that summary, starting out back in April as you did, and giving some history here. And there's a lot of the attendees saying, the wait and see, as you described, makes a lot of sense. Let me just bring Ed Carl in to see, Ed, if there's anything that you want to add. I mean, this was some great practical insights that Bill Paroli just provided. Is there anything from a technical standpoint that you want to add to what Bill has said based on your discussions?
No, I think Bill covered it pretty well. There's a question that he alluded to about whether or not you have to have some kind of a disclosure on the return. Certainly, if you don't have at least substantial authority for a position that's contrary to the revenue ruling, you would have to disclose. You would have to determine for your client's particular facts and circumstances, do they have substantial authority? That clearly the revenue ruling is, but you can have more than one position that has substantial authority. That's the real key, is if you do that. They did an interesting thing in the revenue ruling that they talked about reimbursement of expenses, even though what's happening is forgiveness of the loan. So they give all the authorities deal with reimbursement of expenses, and then they say in this particular situation, reimbursement of expenses in the form of loan forgiveness. So it's an interesting discussion to look at, but Bill did a pretty great job of going through the options.
So I'm just going to summarize here, Bill, and see if there's anything. The two big things are, one is we still think there's a very high likelihood there's going to be legislative action to make the PPP expenses deductible, but you have to take it. So that's one. And then the second thing is the automatic forgiveness. So there's that other. So that's, and they're somewhat separate, but the automatic forgiveness is another reason probably to delay submitting the forgiveness application. So now I'm going to bring us back to a slide that we had earlier, and just with you having these two big factors here. The certainty in some ways, but the IRS position, the uncertainty, when will the legislation, when will there be some type of legislation around making deductibility possible, and then this automatic forgiveness. So now you talk about your state of PPP forgiveness processing with your clients.
Yeah, so as I said earlier, that a lot of we're tracking 230 applications that our firm clients have put in, and they're all sizes from, $25,000 to $3 or $4 million, right? And depending upon the client, if they're very self-supporting, they have a CFO, they have a controller, they're taking care of this themselves. And if they're doing that, what I basically tell them is, if you put all the information together and you like the result, and the result produces a positive result, that's fine. If you don't like the result, call us up and we'll work through it together to see if we can come up with a better result. I think the banks are probably solving this problem for us. A lot of the banks haven't even started taking applications, or they're working on the small ones first. And given the fact that it's November 19th, putting forgiveness in this year, you're probably not going to get forgiveness this year. But speaking to whether or not you have reasonable expectation, obviously, if you've pulled together all of your information and you've completed a loan forgiveness application, you have a pretty good reasonable expectation that it's going to be forgiven because you've compiled all the numbers. So I think that, that you're going to get defaulted out of that. And Ed, I don't know how they would enforce that, how they would know. But as we always know, the IRS has the benefit of hindsight. They can come in 2 years later and look at what happened after the fact and judge you based upon that, just like they're doing with the loan applications. So again, we're just trying to give our clients as much information as they can, be there as their trusted advisor. If they need that really detailed help, we're jumping right in there. And I know there are practitioners that are at all different levels of activity with PPP applications and forgiveness. So whatever you're doing to support your client, you need to keep doing. But we're still in this very, very uncertain time. And then you throw state residency issues on top of it. You throw the new state income tax deductibility at the pass-through entity level into it. And it just creates lots of confusion coming into the end of this filing season.
Well, Bill, I just give everybody some stats on, we are speaking to the lenders, and it seems like there's still, and we're going to start getting some stats from SBA on how many forgiveness applications have been submitted. Our estimate is it's under 5% that have been submitted into the SBA. We think roughly maybe 25% of forgiveness applications they've been started in some way between the borrower and the lender. And firms probably they've thought about forgiveness broadly, but this is something that's going to continue well into 2021. There's not going to be there's not a compelling event that's going to cause mass forgiveness applications to go in, and then you're going to also start this PPP2, and that's going to come into play. It's going to come into play for the firms and for the lenders. And we do know that there's a lot of pressures to do all of this work. So that's one reason why we, as Carrie mentioned, we're saying we think putting in some capabilities could make sense, and this will be a discussion we continue as we go into 2020. There's questions coming in again on why can't a standalone? It's like a Mark Peterson question. Why can't it be a standalone bill passing? So Eric, they want a standalone bill. Go ahead, Mark.
Yeah. Just on that, there has been legislation, standalone bill. Senator Cornyn from Texas introduced one. I think it's S1612. We were extremely supportive of that. We helped to generate 32 co-sponsors of that bill. They've actually tried to pass it in the Senate on an expedited process called hotlining, but all it takes is one objection, and there have been 2 objections to that moving. They're continuing to attempt that, but even if they get it out of the Senate, you still got to get it out of the House. So it is not impossible that a freestanding narrow deductibility bill could make it through both bodies and to the president. I just put it as low likelihood. the most likely is that it is attached to a larger stimulus package. So, for these individual bills that are out there, if you want to write your member of Congress and be supportive, absolutely. As soon as we see the direction of a stimulus package, we're going to engage again to make sure that it's included, to do everything we can to make sure it's included.
Well, thanks, Mark. And there's a question that came in. They said, do you think the state of forgiveness is going to impact PPP2 applications? And yes, we actually mentioned that on a call this week with government officials. We said if this right now, people feel at times that the borrowers, firms, lenders, that the rules are constantly changing, and that is going to be factored in to how people think about PPP2. So that's why we want to get better communication out around the 3509 and 3510 forms, and we need clarity on this deductibility issue, and we need clarity on the automatic forgiveness so people know if they're going to get it or not, and they can move on. So Carrie, you're out there looking at questions. As you do that, Bill, if there's anything else that you want to add, a lot of great comments. People want more oversight on the thinking on the wait and see, but I think you've covered that. And is there anything else that you want to kind of share before we move into open forum here?
If you're talking to your congressional leaders, I gave those 3 bullet points. Here's another point that you might want to point out is that by accepting the money and paying it out in the form of wages as a company, you are also supporting Social Security, state unemployment, and federal unemployment, right, by paying in those employer taxes. So if everybody got laid off and everybody went on unemployment, think of how much money wouldn't have gone into the Social Security system. So again, it's just another reason to think differently about what was the intent. And clearly the intent was not to penalize the very people that you asked to help. That's my talking point when we're talking about why we should get forgiveness. In terms of client service, hey, hang in there. We're all in the same boat, and do the best you can. Come up with multiple scenarios. I am not here to tell you what to do. That's going to be entirely up to you. I am a wait and seer, and I've been doing this for a long time, and I've never gone wrong with wait and see. But I'm sure there's a lot of people out there that will file and will take a position and carry it right to the end, and that's great. And I hope everybody's successful.
Thanks, Bill. Hey, Ed, and Carrie, we come on, but Ed, do you want to comment on anything just relate, follow up Mark Peterson's discussion on the penalty relief?
Yeah, we think the IRS position should change, and we're doing everything that we possibly can to try to get some kind of reasonable approach to make it easy for CPAs to abate penalties. We don't want to make it harder. People, as we know, are already working hard with PPP loan applications, advising clients just who are in challenging economic times. Why should they spend the time trying to abate penalties that really shouldn't be there in the first place? We're also concerned about all of the mail that's backing up at IRS. So why should people be filing requests for reasonable cause abatement that has to be done in correspondence when there's 3 million pieces of backed up mail? So we're pushing pretty hard on this and having a lot of conversations to try to get a reasonable conclusion.
Thanks. Carrie?
Yes. All right. Let's take a look at some of the questions we've been receiving. We obviously have a lot of questions coming in about specific scenarios regarding the deductibility of expenses and some of the scenarios that Bill asked about. We also have some questions about how individuals can get involved. So I think we talked about this earlier, Eric or Mark, if you want to address if the AICPA will be coming out with a letter to help our members contact their members of Congress.
Sure. To be honest, we have been trying to get a sense of the most productive way to engage as we, they got back for lame duck. And so we're definitely going to be engaging the membership and letting them know, and we'll get it out through the town hall series as well, about not just how to contact your member of Congress, but to Bill's point, the case that you should make, and then what it is we should be asking to happen. That's the other part. It's having a sense of what's going to happen from a procedural standpoint. Short answer is yes, Carrie.
Great, thank you. All right, Eric, if you don't have any questions that you specifically saw, I'll probably throw this one to you. The forms 3509 and 3510, we're getting questions about where to find that form and when it's being sent out. If you could give a little background there, that would be helpful.
Well, we put in our materials for last week's town hall. I don't think we put it in this week's town hall materials. You know what we can do, Carrie? We'll make sure we get it posted to the AICPA SBA Center because these forms, they have been released, but they're being provided to lenders. You cannot get them currently on an SBA site, but we can post them, Carrie. So we'll post them on the AICPA.org/SBA site. We'll do that as soon as we can. And I think this is something that there's going to be more guidance coming out on. There are discussions occurring between Treasury and the different Senate and House business committees, and this is a live discussion. So we provided a lot of feedback in that letter that we sent out on Tuesday with 80 other plus organizations. So I think there was some unintended consequences here. We need to improve the communication, what they're trying to gather, and the overall intent of this program is to forgive this money. This is basically a grant. With that said, as Mark Peterson said earlier, there does need to be some checks and balances. So, for example, if you were, voting, the voting companies did very well in 2020. When you were in late April, if you were in the boating industry, did you know that people were going to do all this boating? No. You thought you were going to be impacted. You applied for a loan, and then now you had some good sales. They're not looking for circumstances like that for those people to not have their loans forgiven. So I think we need better communication here on this, and we're working on that. Some more to come. Bill Paroli, I'm going to call you back out here one last time. Thank you. I think Mark Peterson's got to bring you to Washington, D.C.
Yeah, well, we'll see. I just want to say one thing. In my role on the board and as vice chair, I get to sort of peek behind the curtain to see what this team does. And I want to assure everybody on this call, you see this and you see some of the publications, but the amount of effort that goes into this is staggering, and I get to see it from the other side. So I want to thank you guys on behalf of everybody on this call. You're like ducks on the pond, man. You're just smooth on the water, and those feet are just going. They're flying like crazy underwater. So thank you all for everything that you're doing, and I've got a chance to see it live, so it's great.
Hey, thanks, Bill. And on that, I'm gonna move to these final sections. But it's been 2020 has been an incredible year, a great year of relevancy for the firms and people in business and industry, as well as for what we're doing here at the AICPA. So all of these town halls, they will be publishing our archive in about an hour. It'll be in video format. Share it with whoever you want. Leverage it. This is the resource center that I just mentioned. Carrie will make sure we get the 3509 and 10 posted to that. And then it was great having Mary Forrester here. This is more information on all the activities that the Government Audit Quality Center and the other quality centers are doing related to focusing on quality related to engagements. These are the FAQs. This is always in the resource materials. I saw a lot of questions today that are addressed by these frequently asked questions. So leverage these documents. And again, we have launched this MyCP Manager capability, which is free for town hall attendees. Go here, and then this will just track your CP on a weekly basis. and put it in a file that you can leverage. We've got other resources on how to become a better a small business expert. So highlighting you to this program and this course that we're offering. And just to wrap up here, our next town hall is Thursday, December 3rd. We're not going to have one on Thanksgiving Day with you. So we wish you all a great Thanksgiving. We look forward to being with you in 2 weeks. If something critical comes up, we will hold a special town hall edition or do a video recording. One thing that we are very active on is social media. For some reason, I wanted to post some of our tweets from this week. We're highlighting some of the tweets from some of you. We're going to do this more often. We think social media is a highly effective format, so we'll be leveraging more of that. So we now are out of time. This is another event coming up on December 8th, just highlighting that for you. And thank you very much for being with us today. Have a great Thanksgiving. And we look forward to continuing these town halls with you. That's all for now.
Thanks all. Be safe.